U.S. stocks hit record highs, but can the rally last? Mike Mussio of FBB Capital Partners joins us. Mike, we've seen a remarkable bounce back from April lows, but can this stock rally continue?
Right now, investors seem to be indicating that it can. This has been a crazy quarter, a crazy first half of the year. You would think if you had fallen asleep in early January and woken up today that not much happened and the trend was just kind of gradually up. But a lot has happened, and we got more news here earlier today and earlier in the week that it sounds like the deadline of the first week of July for the first extension, I'll call it, on the tariffs seems to be a little bit looser and not as matter of fact. And we're looking toward Labor Day for some actual concrete information around trade deals for the tariffs. And investors are trying to get in as quickly as they can into equities after selling them 3 months ago.
So, what else seems to be driving this rally? Because stocks seem to shrug off the Middle East tensions. So, what made them really look past that?
I think it was the speed of what happened in the Middle East. Investors have been so anchored to these longer, drawn out events when it comes to Middle East conflict, Israel and Gaza being the most recent example of that. That the speed of coming to some type of conclusion and moving forward has allowed investors to look forward and kind of wake up thinking we've gotten through the first half. All of the early concerns of the new administration, primarily, tariffs, inflation, these things are behind us now, at least like the initial shock value, and looking forward into the second half and moving a little bit closer to, potentially lower interest rates, a rate cut maybe actually in the offing, and moving into earnings reports from companies and businesses as they've come through this first quarter of tariffs. And so investors are looking to a pretty busy July, relatively speaking, in terms of information, both fiscal information in terms of potentially an extension to the tax bill, monetary information with the Fed meeting at the end of July and potentially lower rates, and then just some general geopolitical, like relatively positive news is not a bad thing to have in the mix when you're looking to be long stocks.
So let's pick up on that potential July rate cut because we got data today that showed an unexpected pullback in consumer spending in May. Does the recent economic data support this?
It's a great question. I think that certainly the administration supports it. The economic data has supported the Federal Reserve's policy thus far this year. Inflation, we also got some data there today, has been a little bit sticky, closer to 3 than 2 by the measures that the Federal Reserve likes to watch. Employment has been relatively steady. The consumer spending shouldn't be such a shock because it was so high in the front part of the year. We've talked a lot, Lisa, in terms of over the last 6, 7, 8 months about what the forward buying might look like on the consumer side, and then even on the business side in terms of stockpiling a bit in advance of tariffs. So I think you're just seeing a little bit of runoff there. But if you're the Federal Reserve, you're getting steady employment data, inflation that's still a little bit sticky. Maybe it's a little bit closer to a 50-50 if he feels like he can push off, for one more meeting.
Reports came out this week that Trump may name his pick for a replacement for Jerome Powell as soon as September. What do you think a so-called shadow Fed chair would do for the path of rates and stocks?
Yeah, so it depends if said shadow chair keeps their mouth closed for the ensuing however many months of the Powell term. Remember, he announced Powell a full 3+ months before Yellen's term expired, and there was rumors of Powell taking the lead, if you will, even 3 months before that. But Chairman Powell is a professional and had showed deference to outgoing Chairwoman Yellen's term. And I think if you saw that type of situation, then all would be well. If you had somebody who was contradicting the Federal Reserve at every term was becoming the nominee, that would be a little bit of a different ball game. Where is the market going to trade? Is it going to trade like who has control of the puck, or who they think is going to control the puck, for the next 3 or 4 years? So that'll be interesting to see, for sure.